Welcome all. We're back in the saddle here, as you can see, in our quaint office down in North Palm Beach, Florida, back from the New York Traders Expo, where we gave a pretty amazing, and I don't like to use that word often, but it was an eye-opener for a lot of folks that came in to see the Algo strategies. And what I gave was a little risky on the subject line, but it says creating your ATM cash machine through Algo trade strategies. Well, it's not only will we say that not every trade's a winner and you have to monitor positions. So we gave a great outline, and I'd like to give you 3 important tips for those that are using Algo criteria of what to do, what not to do, especially in the futures right now this week. We are undergoing what's called rollover. This is where we take the front month contract, which is March, and we're rolling out into the future to June. So you need to, obviously, if you're running a strategy in a system and you're looking at back test results, 2 things can go wrong with this. First off, June hasn't traded that actively, number 1, because March was where all the volume came in. So in the case of the markets that you see on your board here, we've changed today. This is Tuesday. We've changed into the June front month contract. Now, the euro currency, if you look at the June contract, overnight action's pretty thin still, but it'll pick up as every hour tonight's session and tomorrow we get along. So what you want to do, the first thing that you want to do is go, and when you change from your old strategy into the new strategy, number 1, understand what is the logic that you don't change really your settings unless the dynamics of the market have changed. So that's rule number 1. What do I mean by that? Well, if the average true range has not really expanded from one day to the next, then you want to kind of keep the same settings and the parameter settings that you had on your initial strategy. Next thing I suggest to do, another important tip, is make sure that the trades don't just look at the numbers and look at the performance, and then we'll look at that real quick. So you look at this performance and you go, I like that. 2 contracts over time up $8,000 in over the last month, 30 days. Why wouldn't I go back more than 30 days with June? June wasn't that active 30 days ago. So if you're looking at your strategy, does that make sense? If you're looking at your strategy, make sure you're using the settings from your old model based on the March contract, and then as we roll in, use those same criteria as long as no other parameters have changed. Just make sure that your everything's dynamically set up. Then what I strongly recommend is to go through each and every trade to make sure they mirror up to what you were doing. Now, while I was in New York giving the presentation, our system right on the open did have a nice trade. It went long, and then with the Algo 17, this is the blue line represents the profit target. Now, if you were there in New York at the Traders Expo and you saw my presentation, this is what you would have seen. I said a good strategy will tell you where to get in. The red line is the stop level. When the profit target is hit, it trails the stop, which is this yellow, orange, I don't know what color that is. It's gold or yellow or orange. You will see that line in the sand is the new stop level. And then it trails and trails and trails and trails, and you can see this is a trailing stop function until, in this case, that max barred out. It went long again, it got stopped out, it reversed, it went short for a little loser, and then it went right back in the long position. And notice this model gets out end of day. Everything here matched and mirrored our March contract settings. This means we can proceed. So now that we know, and by the way, this model, you'll see this white line, it doesn't take trades after hours, this model. Why? If I'm running an Algo room and our clients come in, remember we have 2 rooms, one for stocks and ETFs that we trade off of our newsletter, and the other is on the Algo strategies that people can track and trade and monitor. So and they can also, again, the whole point is to piggyback these trades. So when you're looking, whether you're trading, again, the performance I just shared with you, this performance is the last month on 2 contracts. If you did 10 contracts, it's a different story. And this is what we do in the live trading room. So that's the model, and you can see we also include what I like to use when trading S&Ps is obviously look at the breadth of the market, and we have an underlying cash ETF, the spiders, underneath it. Not because it's generating trades, just to see perhaps if there's a signal in the cash but not in the futures, maybe there's a disconnect. After all, the futures do trade off the cash market, right? So we want to look at if you're trading the futures, make sure you're also using, and what we do in the room is take a look at the advanced decline and the trend of that advance versus the decliners. If we get buy signals and you see the Algo strategy generated along, which currently it is in a long position, how do we know that? Well, let's say in time things go by and you don't see a trade. Well, if you look at a red line here, you know that's probably the stop. But most importantly, if you go right down here, ESM19, it says it's long 2 contracts. Its entry was 27.99 and 3/4. Currently, the market's at 802 and 1/4, and the strategy is up $250 for 2 contracts, or $125 each. That's current right now in front of us. So, with that said, when you have an algo optimizer, you want to do a few things during critical rollover week. You don't want to roll out too soon. You don't want to roll out too late. And you want to make sure that your strategies match up not only between the performance and it mirrors what your old strategy or the old futures contract did, but also check the charts and make sure graphically they're doing what it was intended to do. Next, looking at the euro currency, this is the June contract. Now, notice that we don't have to worry about it, but boy, we know that the euro currency doesn't make ... Look at these dots in here. This means this is putrid. There's no, the market's open, but if you're running a backtest study on performance, there's no range there. So again, we use the same criteria, the same signals in your March contract and assign them into the June contract, but make sure that those strategies line up and those signals line up, because you may have muted ranges and not a lot of things trade according to your main market that you had been trading over time. Now, this is the euro currency a week ago. This model does not trade again prior to us coming in the room. Why would anyone say, hey, look at this strategy? You weren't here to trade it, but we did at night. No, that's not transparent. That's not the way it works. And that's not the way it should work. And that's not how I run business. If I'm putting out trades and you're seeing them here, I don't want people to walk in and say, hey, this thing made a ton of money last night when you weren't here, but let's deal with it today. We want to know, how can we make money during the time that we have when this room is open, and that's what I take responsibility for. So what we're doing is doing just that, taking responsibility of our strategies, maintaining that their structure is still sound, the logic is still sound, and all we're doing is converting the strategy algo criteria from March to the June contract and mirroring to make sure that it still works well and makes money as it's supposed to. Now, this is the crude oil contract, and I'm getting, as we were mentioning today, a little tired of the nice smooth trends that occur in the overnight session. Once again, we can only trade what we can trade during the hours that we trade, right? And so I want to make sure we're going to be coming up to rollover. We're going to be getting out of April, and we're going to be going into June futures pretty soon. Same thing. You want to make sure that there's still decent volume and liquidity. When you start to see that there's no volume and liquidity, it's time to roll out. But in this case, we still have volume and liquidity. What we don't have is wild trending trading ranges in crude oil. But as it is, this model's still working well, doing a very good job, and it's providing not only great trades, but again, money making, and that's what it's all about. Lastly, what we've done in the trading room is, if you're having a model based on amount of equity that no one can trade and it looks great, it's probably not apropos for all traders. In other words, let's take a look at the VXXB. This is the volatility. The signals all work. So this, in this last technique or tip that I want you to know, is if you have settings that say your base model is a $100,000 trading account and you only have $25,000 to trade with, then you need to build a model based on maybe $20,000 worth of capital that you're going to apply to that market. That makes sense, right? Why? Because if I say I'm only going to risk 3% of my capital, well, 3% of your capital, that's nice, but 3% of capital on a $100,000 account, that's a little different, right, than 3% on a $20,000 account. It's still 3%, but your values will change and your percent change of performance will be different. So therefore, let's take a look at this. This is since the beginning of the year, the VXX trading on what? $20,000. And you'll see here, this is our swing trade model. We're using position calculated method number 1, which states I input what the capital is. I want to be in as many shares as possible with up to $20,000. And that's what that will do. And that is our max trade loss. You can see, I don't want to lose any more than $800. And since we know what the strategy's biggest performance has been, if it ever gets to around $2,400, get me out. That's the kill button, the max profit target. We don't want to let anything ride anymore. We're not scaling out. Hits that number, hit the shoots, pal. That's the way we're playing that. But here you'll notice that with all the greatest intentions is when we change from a $100,000 size account to 20, what dynamics do we change? Well, with those parameter settings, a lot. You can't risk $800 if you have a $100,000 account, right? That changes that, and that's what I was referencing. So what we want to do is make clean signals that are good to see, that are not just logical, but affordable, so that we don't run into the mind game where we're afraid of trading because the risk is too big. I think if you're trading a $20,000 instrument or $20,000 worth of capital, no one wants to lose $800, but it's livable, right? It's not going to be the end of the world. And we also want a system that says, gee, if this is the max profit target, protect what I've earned. And that's where trailing stop functions. But I don't want to keep getting stopped out. Here's another one. I don't want to keep getting stopped out. If the thing doesn't hit its profit target, why even play with it? Well, guess what? It does hit profit targets. And there's a great example of how it works. This is a trade that was done in our room, and it hit the profit target. I was praying, please hit it, please hit it, please hit it, hit it, hit it, and baby, it hit it on the open the next day. And then I'm like, oh, I was hoping it didn't get out. Once you're out, of course, right? Now, what's my point? My point is you got to take the good with the bad. And I want a system that when it says to get out, is its dynamics still working? And the dynamics are still working. So if it doesn't hit its profit target, then get me out. If you change the dynamics of your equity on your size of account, then without a doubt, you want to make sure that your parameter settings mirror your old system. So if you had a system that worked great and it had the strategies for $100,000, when you change it to $20,000, make sure that those all work out and the signals are the same and your system is getting you in and getting you out at the proper level. The only thing that really should change would be your bottom line. And as you can see, since Monday morning, when we were in New York City in the live room, we had this going for everybody, and the thing generated a entry right here on the open, a long position on the spiders, and it entered a new short position on VXX. All transparent. You can see here's the spider. It's long. Now that would be based on a $100,000 account because people can trade that $100,000 account. And here's the short VXX based on 20,000. Notice that in the room, what we've done is we created, you can see they're both almost equal amount of profit, right? So we've got the right beta for what one needs. So that's one of the important things about our trade algo strategies and when we look to modify and maintain our system. So I hope you enjoyed those 3 tips of what to do during rollover, what to do to look at those trades exactly as they come out on your performance. And number 3, make sure when you change the amount of equity size you're trading, you got to adjust the logic behind it so that you have these types of results. Thank you all very much. Until next time, keep trading successfully and stay on the right side of the market.